So here's what we're going to walk through, and we'll break it down in stage by stage. But this is the start to finish, everything you need to consider to get to a successful closing. And so it starts with, again, the LOI and the term sheet, and that kind of what the kind of identification of interest by both parties and putting pen to paper that this is really happening. And then the borrower will go through underwriting, approval and the commitment of the loan, and then finally to the requirements that are usually outlined in the closing process, but that are just, there's no way around them. They're just loan requirements that have to be met. And then finally, the actual closing. So with that, we'll go to the next slide with the first step, and Joe will cover that.
So yeah, on this first phase of this big topsy-turvy loan process, again, we're going to work with you. We're going to work with the borrowing buyer. We're going to put that entire package together. It's going to be about, I like to say, 85% of what the bank would need to really fully underwrite that loan. It's really just absent the bank's application, their forms, some SBA forms, and the business plan and some projections, and maybe one or two things from your seller, depending on what the bank recognizes. So we're going to put that all together. We're going to present to our banks. We don't apply on anyone's behalf. We don't pull their credit. We build it all out, do all the work for our banks. That's why they love us and move quickly. Here's this opportunity. Do you like it? Do you not? We prepare a little write-up, tell the nice story that they want to hear. And usually within 24, sometimes the same day, 24, 48 hours at most, or, we'll be knocking on some doors. We should be seeing a proposal or receiving that feedback, right? If the bank likes the deal, they're going to propose on it. That's a great sign. We really have high expectations of our resources when they do propose on opportunities, that we're going to be able to get them done in underwriting. And then on the opposite end of that, tell us no, right? If it's not something you can do, or if you just see too many challenges, for your resource, your particular outlet, and you don't think you're going to be able to get there, just move on. Cut us loose. Don't drag us through the mud. There's no value in that. For us as intermediaries, we want to make sure that our banks are being honest with us and honest with everybody. Moving forward, if they feel it's a deal they can get done. So assuming we obtain that proposal, we provide it to the borrower. We allow them, of course, to review it, ask any questions, share any concerns. If they feel comfortable with it, they sign it. The bank will typically ask for a small good faith deposit, something to the tune of $2,500, maybe a little bit more. That is a fully refundable deposit if they do not approve the loan, or should the borrower something come up in their due diligence, congruently with the underwriting process, that would be a fully refundable deposit. It does not go hard until we, engage into the loan closure process, at least not with our resources. I know some other banks out there may take a deposit on the front end, and that immediately goes hard, but at least with ours, we're very protective of people and their money and all that stuff. So, that money, that deposit, eventually goes towards closing costs and goes towards down payment. So when the LOI is signed, we provide that to the bank, the deposit is made, and now we go to the next phase, which is the next slide, where Heather is going to talk about that.
And before you go on, maybe a quick question.
Sure.
I'm not sure exactly in what reference this is mentioning, but advisors of LaGrange, what's criteria for the banks you work with?
I think, hopefully we'll hit on some more of these as we go, so you can ask some follow-up questions or bring it up again. But, something that's really important to us, and what Joe just touched on with even the initial stage with the lender getting a term sheet, the lenders we work with, for example, if they give us a term sheet, they've done their upfront analysis and due diligence. We will not tolerate lenders that offer a quick term sheet that then will not approve a loan. And so things can come up. Underwriting might, in the underwriting process, it might, kind of some details about other credit or other issues that weren't identified early. So I'm not saying there aren't problems that could prevent an approval, but the banks that we work with are, most importantly, when they give a term sheet, they're good at what they do. So they've done their upfront analysis. And so that means they should be funding that loan. There's going to be a lot of work along the way to get it. So that's the first thing. I think the other thing too is efficiency. I mean, Joe mentioned in that early on process, I hate to say we love yeses from banks, but we also, if someone's not going to do the deal, we want to hear a quick no, like Joe mentioned. And we also, we know who has an appetite for what type of industries or who's stronger in different regions. And so that's kind of how we get to work with the banks. And then this is an interesting follow-up question about the back offices. And you're absolutely right. There's some wonderful bankers and relationship managers who do all the upfront work. And then you get to closing and just, you can't get a hold of a closer. You can't get follow-up information about what documents needed. And yes, we have fired banks we work with exactly over that process. Closing should just be a matter of getting a checklist and providing the documents off the checklist, and expecting the same responsiveness from the back office that we got from the relationship manager getting to that point. So yes.
A follow-up to that. I'm not worried about the bank approval. Have you seen closes with them? Do you know how their back offices work?
Yeah, so it is really important that they can handle not just the front part, but the back part. And we won't, it's not worth anyone's time to go through a bank that's poor at executing the closing process.
Yeah, and that's also, I mean, I'll add, whoever's, begging the question, that's part of our job. We don't function as simply brokers. This loan gets going with our banks and we disappear and we're on to the next one. We kind of keep our arms wrapped around that entire transaction from start to close. So that's part of our ongoing involvement in our job as the advisors and, as your partners, right? We want to make sure our bank remains efficient, through the underwriting. If there's hiccups, if there's hurdles, if there's slowdowns, what's going on? What are the issues? Why is this taking so long? We're going to push. We'll be there to push through the close. If a closer, if there's some inefficiencies or some difficulties, or we just feel like we're not getting that level of attention and responsiveness that we need or that we desire, or if there's something at the close, a bank feels like they're asking for something that can't be supplied, and we feel like that it's a hurdle we should be able to work through or that they should move on from. We have Lynn on this call. I can't tell you how many times we've gotten to a point in a process where a bank or a bank's attorney or somebody is misinterpreting a rule or asking for something that we know is not an SBA requirement, and everybody's throwing their hands up and sellers are saying, I can't do this, or I can't get that, or, it's going to take me months to do something. We've had Lynn step in and actually educate folks at banks and say, look, you can still be in compliance if you do this or you do that. So, yes, we have lender criteria. And, I will say that I've worked through loan processes with the same banks, and sometimes, they are extremely efficient and you just get the most wonderful experience. And other times you're scratching your head going, what the hell happened? Why is this one so much more painful than the other one? I'm sure you guys have gone through it with some of your immediate relationships. But again, that's part of our job, and we're going to do our best to keep our bank honest to that process and to what we expect in terms of, how they deliver on that loan. So, from a criteria perspective, it's all the things Heather mentioned, but from a ongoing relationship perspective and a grading perspective, it will be that performance from that start to underwriting to approval to close that's going to allow them to remain, you know, a resource of ours and allow them to keep receiving our business. So
Yeah.
hopefully that, you know, better answers the question.
Yeah, there's a lot of weekly and monthly changes there, right? You know, lender gets an influx of deals and they just say their underwriting queue is 2 weeks behind or a week behind, right? I mean, we have to be making real-time decisions and having those daily, hourly discussions with the lender and current status, right, helps us better match a deal that's going to also have a good customer experience along the way. So hopefully that helps. Darlene also had a quick question here. Do you have a list of preferred industries? I don't know if Joe or Heather, you want to take that.
Well,
I mean,
I'll start and
yeah, go
oh,
ahead,
sorry,
Heather.
and then you guys can add, but I would say overall, we're pretty much industry agnostic. However, we know there's some lenders, for example, that don't love restaurants, or some are better at e-commerce than others. So we are open to anything. The SBA, and Lynn, I'm totally blanking on what the term is. The SBA does not like, there's certain guidelines. The SBA will not fund certain industries. So Lynn, what is the term I'm thinking of?
Well, they won't, there's ineligible industries from the SBA, no investment properties or anything like that, but they, you know, they don't have a problem with any specific industry. Some of them, they're much more, well, they won't lend money to businesses of a prurient nature. So no adult dancing clubs, you know, strip joints, things like that. They won't do that. They also have certain restrictions on businesses that deal in religion. And there's certain things that have to be done if there's a religious component. They don't lend money for businesses where gambling is more than 1/3 of their income, things like that. Is that what you were asking about, Heather?
Yes, yes.
Yeah, they don't fund investment properties. They don't fund financial institutions. They don't do anything where the income is speculative or based on fluctuations of the market. They don't lend money for crypto businesses. It's, you know, too risky, things like that.
Joe
But
or Fran,
other than that,
anything
the
else?
standard businesses that you will see buying and selling, I would say that 98% of them are fine.
Yeah, the only thing I'll add is Heather is right. We're industry agnostic, and if it's a particular type of industry, again, we're not like shopping opportunities. We are hand selecting the top 2 or 3 resources within our network that we know are going to be very comfortable, you know, with a particular deal, with the associated risks, and of course with the industry. So yeah, any type of transaction or business that you're trying to sell, you know, don't feel like it doesn't fit our box.
And with that, I will circle back to the underwriting portion of the loan process. So what will post-term sheet from the lender, the bank will send a list of very specific underwriting documents that address, some of them will have to be answered by the seller, or by really you as a broker would be the in charge of getting the information, and you probably know some of the answers anyway. So some of it will be about the business being acquired. Some of it is personal about the guarantors, but it'll be a very specific list that will be followed up with or be sent to the borrower. And what takes a little bit of time here, quite frankly, is the responses that are provided to the bank almost always spawn another list of questions. So it's not like you get this list, you respond to everything and they're done. Some of those kind of, you know, create more questions. So it's a little bit of back and forth. So we do usually allow, this is really, you know, a 2-week process. And it really is in a situation where the borrower just has to be quick to respond, and that the borrower is not the one that's holding up the process here. They're providing the documentation quickly. And upon the bank, again, going back and forth and having all those underwriting questions resolved and to a successful end, and everything makes sense to the underwriter, then the banker or the underwriter will provide to their credit committee kind of an underwriting report, and it will be submitted to credit for a loan approval.
One of the things I'll mention about our banks when we talk about efficiency and underwriting that I'm really liking and seeing a lot more of, we talk about this portion with the bank sending a list of initial needs and questions and all that stuff. A lot of our immediate resources are actually, when these initial questions come out from the underwriter that has taken possession of the package, and, I'm sure Heather and Fran have experienced this, a lot of our immediate resources are answering a number of those questions for the borrower, for the seller, based on the things that we've already shared with them, right? Because, you've got another set of eyes on an opportunity, and they're getting through it, they're trying to understand it. It can be annoying when they come back with the same questions that you feel like you've already answered on one end of the process. So, when we talk about streamlining and efficiency, this underwriting process can be a little bit quicker with us, because again, that work we're doing and the relationships we have. So just wanted to add that as well.
Great. And with that, we'll move on to approval and commitment with Joe.
So again, as Heather noted, the underwriting gets completed. That write-up, that analysis, all of that, big, lengthy, more in-depth analysis that the underwriter is prepared gets submitted. Whether the bank has a credit committee or credit officers, most of them these days have like a credit officer or two that have to sign off on a loan depending on its size. And the expectation, or what we typically see, is once that write-up has been submitted, we usually have a response, whether it's a yes, whether it's a no, hopefully not, or sometimes a couple questions from the CO or COs. That'll come back to us within about a day or 2 days' time. If it's approved within another 24 hours' time, if not sometimes the same day, a commitment letter will actually be issued to the borrower. That is, of course, the bank saying, we are committed to do this loan. There's no longer a decision-making process on this loan. We are going to do it now, as long as you meet this lengthy list of needs that is your closing needs list. We will close on this loan for you. So the borrower then signs the commitment letter. The bank will ask for an additional deposit, that previous deposit, that good faith deposit that was refundable, will now go hard and be put towards some of the closing costs, and they'll gather some additional monies from the borrower. And again, usually within another 24 hours time or so, the assigned closer will then reach out to the borrower once they've put together, basically gone through and put together the entire needs list to close that individual transaction. So it is catered to, that particular transaction. There's a lot of standard stuff on there, but of course, it's individualized to what will be needed on that transaction. And then the closer, becomes the main point of contact. Again, we remain, in the background, keeping our finger on the pulse of everything that's going on, the conversations, the responsiveness, the things that are being provided. We'd like to keep an eye on that. Sometimes, if a closer, misses some things or is asking for things twice, we can try to help clean that up. So, that's where things go. And as we move towards that loan closure. Next slide, please.
This is the section here with the requirements. This is just part of every loan process, and there's no way around them. They just got to go through them. And we'll talk after we go through the start to finish overview. We'll talk a little bit about what can be hard about closing loans and some challenges that you can face from a borrower's perspective in terms of timeline. So we'll circle back to that. But The first thing is once that second, like Joe said, the next deposit will be due. These deposits are coming to the bank because they're going to pay for these third-party costs of the loan. So the first cost will be for the third-party valuation. And this is something we generally know, you know what you're going to expect it to be. We have a sense of where we think it's going to be. And quite frankly, the lenders, they do, as part of their their underwriting and their approval process, they know where they think the value of the business is coming in as well. So there shouldn't be any surprises here. Guess what? Every process can, again, have its challenges, and sometimes evaluation does come in lower than expected. So we'll talk about that later. But the what's important about the third-party valuation is this is where it's, again, it's a third party. It's not the bank taking a long time. It's not the borrower. It's not the seller. It's just a third party. They're usually pretty efficient. So, and they'll set an expectation. And quite frankly, the bank will provide bids sometimes where you can pay X dollars for a 7-day evaluation, 7 days with a little bit higher premium, or just have a normal 10-day valuation at X price. So that's, again, a nice feature. If the borrower is willing to pay extra to expedite, they sometimes have that option, which is nice. The next requirement is if a loan is not collateralized, there is going to be a life insurance component. So the life insurance is on the borrower, on the guarantor. If there are multiple guarantors, it's the guarantors. And what's important about that is we usually know that, or we do know that early in the process. This is not something we wait for a loan approval to start this process, because this is a whole other timeline. It can take months. And again, we'll talk about the timeline later, but this is something we know is coming if a loan is not fully collateralized. And we'll work with the borrower and encourage them to reach out to certain insurance brokers are very aware of like the an SBA loan timeline. And there are certain life insurance brokers that can line up their the bids and the actual policies so that they're available in time and will not hold up the closing. And so we like to bring that up as early as possible, but this is where they need to see actual insurance certificates and the actual details of the life insurance policy that will be assigned. Another note is that usually we encourage borrowers, a lot of borrowers come to us and already have a life insurance policy. We encourage them to take out a new policy for these loans rather than assigning other policies that might be intact currently for either, heaven forbid, like a worst case scenarios or estate planning purposes or whatnot. We like them to have a loan just for this so that it doesn't impact, we like them to have a policy just for the loan so it doesn't impact any of their planning for their family or loved ones. This just takes care of making the bank whole. Another part of this is tax verification. This usually is a very seamless process. It's just a matter of completing signing a form that goes back to the IRS. Again, there's sometimes problems with this. Sometimes the bank types up the tax verification and is instead of writing out street, just writes ST. That, believe it or not, an odd space or an odd period in an address will make the tax verification bounce back. So again, it's something, and this is why the bank underwrites to taxes and not internal documents. They are getting all of their support and protecting themselves by getting any financials verified by the IRS. So that's part of that process. And then the last part, and again, this also comes back in terms of timeline and some challenges, but this is also where the asset purchase agreement gets finalized and everyone makes sure from a legal perspective, both parties are signing off and all the language is as everyone had intended. And it does take some back and forth and some legal review. This is not a quick process, but this is where everyone is making sure the agreement is documented as the LOI had outlined, but it's finalized here in the asset purchase agreement. And with that, we'll hand it back to
before you go there, I want to switch back to the slide. The life insurance requirement that Heather spoke about is when the loan is not fully secured. But that rule is going to change in the new SOP. I just wanted to add that in there. I am not sure that banks will not continue to require life insurance when it's a sole proprietor or a dentist or a doctor or a business that depends solely on the owner, and there's no specific succession plan. But the requirement is there today, but it is going to be relaxed to say to follow the rules of the lender and in what they would do with similarly sized non-SBA loans. So although it may be prudent lending to have life insurance when you're not fully secured, it's no longer going to be mandatory. Just thought I'd add that in.
Thanks, Lynn.
Thanks, Lynn.
Sure.
All right, and lastly here, so the closing process, and I think it's important to touch on a couple things with the actual close of the loan, because I know everybody gets very anxious, the seller, the sell side, when are we closing? When are we closing? Why can't we set a date for closing? It can very quickly become a very frustrating period of time that those last few days or even last couple weeks leading up to a close. So, once the bank has received all of the closing needs, most banks will need a business week's time, or at least allow for a business week's time to pass the entirety of the file to their counsel, their bank counsel, to do a full review for any compliancy issues. And I will say right now, of the hundreds of loans I've closed, transactions I've closed, or whatever, every single time, I believe, attorneys have come back with changes. Fran and Heather can probably echo that, but there's going to be something. It's another reason we encourage you get a final between buyer and seller. It doesn't matter if they sign off on it just yet, but get a final version of the APA sooner than later. Don't save that, till the end, or let it drag on and on. Get that into the bank, allow the attorneys to review that earlier in the closing process so they can make their comments and their changes. Because I'll tell you what, when those attorneys start reviewing things, they're going to pick up on things that the closer might have missed, or, that wasn't initially provided, or that may have gone stale, or something being, an I or not dotted, or a T not crossed. They're going to come back with something. So there's that 5-day window, and you can expect to hear within that 5-day window what things they need cleaned up. So once the attorneys, give the full 2 thumbs up that we're ready to close this loan, that's when the actual closing will happen. Now, want to talk for just 1 second, as I was mentioning the attorney review and all that stuff, and the anxiety of setting a closing date. I will tell you this right now, borrowers and sellers and everybody, as they get closer to the close, they're wondering why a bank will not set a closing date. Our banks are very careful about sticking their foots in their mouths and telling somebody that they're going to be able to close on, the 26th of the month, and it's the 20th, and there's still 3 things that are out there that need to be provided, and they're setting a closing date, or setting an expectation on a closing date, and sharing that with folks, and everybody's gearing up to do that, and then suddenly those 3 items don't come in, and we're not within that 5-day window of review, and suddenly the bank is saying, guess what, we can't close on the 26th, and everybody gets really pissed off. So I will tell you right now, when the question of when are we closing, or when is the closing date, is going unanswered, it's not that everybody is just ignoring you. It realistically means that something has not been provided, or something has not been fully cleared yet. And until that happens, the bank will not set a closing date. They're very careful again, about, doing that. They're understanding that people are going to provide documents and do things and start to, prepare for some things. And if that they can't live up to that date, it's going to cause a little bit of havoc. So just be understanding and be patient towards this very end of this process, and getting that closing date. It really quickly becomes, or is all about, all of those materials being provided and cleared by the bank. So we're good to go. 2 thumbs up from the attorneys. A closing date will be set. Typically the seller does not need to do much on closing day. It's the borrower that's going to have to sign a nice lengthy contract, and then ultimately when the borrower signs the documentation, the closing documentation, the bank will, release funds to whoever's the escrow agent, whether that's buyer's attorney, seller's attorney, or if the bank's attorneys are acting as escrow agent, they'll release funds. They'll get the signed documents, back from whomever handled the closing. If there was a mobile notary or something along those lines, they'll give a quick review, and then they will give the official word to the escrow agent. Okay, we are green lighted to go ahead and release those funds, and then the loan is officially closed. Sometimes, as this last point makes, and again about keeping your sellers patient, depending on what time of day it is, if a wire cutoff has been missed, the seller may not be able to receive their funds until the next day, next business day, of course. So, if closings happen a little bit later in the day, or they take a while, or, if there was a hiccup, somebody didn't sign somewhere, they have to go back, correct something, redo something. Oftentimes we fully sign off on deals, but they don't actually fund until that very next morning. So just be wary of that as well. But that's the brunt of the very tail end of your closing process.